Hi friends, how are you? So it's been a while I came with a new video on financial literacy. So today I have decided let me make a video on the most important and the most happening topic in the stock markets, that is mutual funds. So I have been receiving so many questions, including from my family members, my own sisters and friends, and so many of my students. So everybody asks one question: what is the starting point, or what is the best way to enter stock markets and to invest money in stock markets? For all these people, my single sentence answer is it is mutual fund. Before I go into the details and I explain you what is a mutual fund and how mutual fund works and what are the advantages of entering stock markets through mutual funds, not through direct equity, I'll discuss so many things and I'll keep it very short but crisp and clear information I'll give you in this video. But before that, I'm telling you, I am a chartered accountant. I am also a qualified cost accountant. I have done my master's in finance. I have done my post-graduation diploma. Having said that, I am not into any broking services, I am not into any consultancy services, and I will not give any advices. Even if someone calls me and asks me, shall I invest in this company, I have 1 lakh rupees, how to create a portfolio and all, that is not my cup of tea. It is purely for education purpose. What I felt is the level of financial literacy in India is far lower compared to other countries. So when I have interacted with some of my friends who settled abroad, they say even the doctors, engineers, and those who are not belonging to this finance field at all, even they have pretty good understanding about stock markets and how the stock markets operate, how to create wealth, what is long-term investing and what is trading. So they have a very decent idea. But when it comes to India, even you studied BCom, MCom, MBA, you are living in this finance world, but still you strongly believe, or there are so many myths and misconceptions. The mindset is like stock market is something like gambling, isn't it? So I thought to increase the financial literacy, I need to make some videos to educate them, at least my own students. I have thousands of students where I teach chartered accountancy, cost accountancy, and global finance professional courses. So at least even if a few thousands see this kind of videos and they understand what is stock market, then this long-term wealth creation will take up a new shape in your life. So that is the reason I have started this, and I have got very good response for the first 3-4 videos I have made, and continuing the same, today we are going to discuss about mutual funds. Have you seen an advertisement recently about this mutual fund Sahi Hai advertisement with Sachin Tendulkar? So a person of Sachin Tendulkar's brand, he has to make a video, and the regulatory authorities requested people like Sachin Tendulkar to come and speak about this mutual funds and all. So typically in this advertisement, one mother will be watching a son doing net practice in a ground, and Sachin Tendulkar standing next to the mother, and the mother and Sachin Tendulkar speaks about the risk, speaks about the returns, and then Sachin Tendulkar says, yes, there is risk, there is return, it is something similar to mutual funds. And then he says, in mutual funds there is calculated risk, but there are very good returns and all. So this is one advertisement. Now let us understand what is a mutual fund. 20 years back, 15-20 years back, there was one advertisements released by one of the mutual fund houses. Do you know what is the ad? One small kid, maybe 5 years, 6 years kid, a very cute kid, playing in a ground, playing in a park, amusement, some ground. So there is one ice cream vendor. She goes with the currency coin. Her granddad gives some currency, some 1 rupee, 2 rupees. So she has that in hand, and she runs to this ice cream vendor and she asks, Bhaiya, edena? Then he says 10 rupees. But this girl opens hand and sees only 1 rupee is there, with a very cute, that disappointing crying face. She puts, and then she goes and she sits, very dull, under one tree. Then one other guy, a small boy, maybe 6 years, 7 years old boy, he runs, he asks her, why are you sad? She said, I want to have that ice cream, but I do not have enough money. Then that guy brings one piggy bank with some, iron sheet kind of thing. Small jar will be there. He'll make one hole. He'll make that into a piggy bank where we put all currency coins and all. He'll go to all the friends and he say, hey, whatever the money you have, put in this. So one person gives 1 rupee, one person gives 2 rupees, and this first baby gives 2 rupees. Like that, everything is collected, and then he opens it. So many coins are there in his hand now. Now he runs and he gives that to the ice cream vendor, and the ice cream vendor gives this big bowl with so many scoops of ice creams, very big bowl of ice creams. Then he comes, he calls all the people, he calls all the children with the different spoons. They say everybody sitting around and everybody is eating ice creams and enjoying. This is the classic way of explaining what a mutual fund is. Imagine you are earning 25,000 rupees and you can invest 1,000 rupees in some stock systematically every month. So you have 1,000 rupees that you can invest, or you could be a student, you have only 500 rupees that can be invested. So you came to a person who has little more knowledge than you, like me. So you came to me and asked, Pavan, I want to invest money in stock markets. Can you please suggest one very good fund or some very good company? Then I said, okay, why don't you invest money in MRF, see it, or why don't you invest in Eicher Motors, why don't you invest in Nestle? So you opened some website or your Demat account and you got almost a kind of heart attack seeing that one share is 20,000 rupees. You call it Eicher Motors, you call it Nestle, you call it MRF. So there are shares with 20,000 rupees, but having excellent prospects of making hell lot of money and wealth in the near future. So I asked you to invest money in Eicher Motors, but you realized you have only 1,000 rupees, you have only 2,000 rupees, you have only 5,000 rupees, but one share comes to 20,000 rupees. You call it Page Industries, you call it. There are so many good companies where one share will be 15,000, 20,000, 25,000, 30,000. Now the question is, how can you invest? In your whole life, you cannot invest in this because your salary itself is 25, 30,000. So investing in 10 shares, 15 shares is above your head. You might not be able to do that. Now, what is the solution? What is the solution? Now, if you can identify a mutual fund which has a policy of investing money in automobile sector, you can invest beginning with 100 rupees or 500 rupees. Can you believe? With 500 rupees, you can start investing in mutual funds. Some funds with 100 rupees you can start. Can you believe that? Some funds minimum will be 5,000 rupees. So say this 500 rupees or 1,000 rupees, whatever you have, investable funds, you put that in that fund. And this mutual fund manager, he collects money from so many investors like you, and that is called AUM. He will have AUM, assets under management, which is some thousands of crores. So that thousands of crores of money he will invest in a portfolio which comprises automobiles, which comprises this particular Eicher Motors. Now imagine this Eicher Motors has given 30% return on investment. That 30% return on investment goes to the mutual fund, and the mutual fund company will distribute that 30% or 40% return on investment straight with you only after deducting the administrative expenses, which are not even 1%, 2%. So the conclusion of the story is 20,000 rupees share you are unable to buy, but indirectly 500 rupees also you are investing, and finally your money is traveling to that particular company with huge potentiality, and you are getting that 30%, 40% returns. Isn't it a beautiful system? Now some of you will ask, Pavan sir, the system is good. Are there any loopholes, or is there any catch? So is there any gray side of the story? The answer is no. It is not like the chit fund companies you see where you invest money every month, chitty in that subscription you pay, and one fine day he will turn the board and the company ran away. It is not any NBFC like that. Mutual funds are also NBFCs, but definitely are controlled by so many regulatory authorities. So there are no instances of mutual fund companies defaulting in repayment of money to shareholders or unit holders. Franklin Templeton, something has happened very recently, but it is not a default. Okay, they are not running away. Money will come. Money will be very safe. Some crux is going, some clash is going on, but still the money is safe. Nothing will happen to the money. Even Reliance run by Anil Ambani, Reliance Group run by Anil Ambani, they are into mutual funds. Every business in Anil Ambani Group is in doldrums. Every business crashed like hell. But still, this Reliance mutual fund, whatever is there, nothing happened to it. Now it is Nippon Mutual Fund. Nippon, previously it was a joint venture. Now Nippon has completely taken over Reliance mutual funds. Nothing happened to unit holder. Your money is absolutely safe. So investing money in mutual funds is safe. There will be no default risk. Sir, will there be a risk of stock market fluctuations? Yes. But if you are in direct equity, if the impact is 100 units, if you are in mutual funds, the impact will be 10 units only. That means you are 10 times safer when you are investing money in mutual funds when you compare yourself investing money in equity. Now there is a diagram on the screen. If you look at what happens, the three investors, can you see three different color investors? So all of them, they pool in money to a particular fund which is handled by a fund manager. These fund managers are extremely knowledgeable, extremely experienced, top-notch professionals, and they know the economics, they know the finance, they know how the stock markets work, they know the valuations, top to bottom, A to Z they know. A to Z they know. For example, today Reliance Industries share is 2050 rupees, 2050. If I have 2050, can I buy Reliance share? The answer is yes. But is it a right decision of buying Reliance? I don't know. Someone told me buy Reliance, it will grow. Someone said don't buy Reliance, it will fall. I am confused. I don't know. Even if I know the direction also, the biggest challenge for any investor is to understand the intrinsic value of the Reliance Industries. For example, that means I am spending 2050 and I am buying one Reliance share, but is it worth 2050? What is the actual worth of? See, market price is different. The worth of share is different. This is where valuation comes into the picture. In valuations, you follow so many types of different models. You as a layman might not be able to understand it. I as a teacher in finance and as a chartered accountant might be able to understand to some extent, but these people, fund managers, they understand it completely, how to value a company. If Tata Steel is 700 rupees, market price of the share of Tata Steel is 700, they know whether the actual value of Tata Motors or Tata Steel is more than 700 or equal to 700 or less than 700. For example, last year, my portfolio manager, one of the relationship managers, RM called me and said, Pavan sir, invest in Dixon Technologies. I have invested. Whatever they said, I have invested. Can you believe it has given 300% returns? Again, he called me and said, Pavan sir, buy, what is that? Deepak Nitrate, Tata ELXI. I have invested in these kind of things. Can you believe they have given more than 100% returns? How they know? Because they are portfolio managers. They are born for that. They are trained for that. They know the valuations. So it is not like predicting the future. They are not predicting. They are not astrologers. They know the science. And remember, there is a huge difference between trading and investing. Intraday trading they do. Morning you buy, afternoon you sell and all. There is a huge probability of you making hell lot of money and there is a big risk of you losing money. Mutual fund managers never trade, which is very risky. They don't trade, they only invest. Now you might ask, Pavan sir, what is the difference? Simple. For trading, you depend on technical analysis. For investing, you depend on fundamental analysis. About this fundamental analysis and technical analysis, I'll do 2 separate videos. But they are based on completely different set of dynamics and equations. So when you are trading money, there are people who you can count on fingers that they made money. All these people who are filthy rich today, right from Warren Buffett to this Rakesh Jhunjhunwala, all these people are investors. They are not speculators. They are not traders. They don't trade. They don't do derivatives. No. Rakesh Jhunjhunwala invested money in Titan Industries when Titan Industries issued share for 3 rupees. Today it is bloody 1,300 rupees. And he bought crores of shares. That is how they make money. That is how they make money. So Warren Buffett identifying Coca-Cola company, identifying Cadbury, identifying the, this newsprint agencies and putting money and identifying Apple. So they, iPhone, Apple company. So they made hell lot of money by investing for the long term. Even as a long-term investor, I have invested in Reliance Industries 3 years back when it is 1,200 rupees, 3 years, 4 years back, and today it is 2,000 plus. I lost hell lot of money in trading, but I never lost money while investing. So this is what makes you a matured and a better investor. So the advantage with mutual fund managers is that 1, they are experienced. 2, they exactly know the formula of valuation. 3, they do not play the game with money. They just invest. They will not do trading. Trading is very big risk. So what they do is they invest in securities and the security generates returns. So this mutual fund manager, he invested money in Infosys, he invested money in Reliance Industries, he invested money in Asian Paints, he invested money in, Maruti Auto, he invested money in Tata Chemicals, he invested money in different companies. So even if 8, out of 10 makes money and 2 are in losses also, he is not a god, no. Even he can do some mistakes, but still 80% of the portfolio is in profit, 20% of the portfolio is in losses. In this situation also, they'll be able to give huge returns. They'll be able to achieve huge returns. These returns will again come back to investors. That means I invested money in Axis Mutual Fund, Axis Midcap Fund. Axis Midcap Fund invested money in XYZ company. XYZ company earned profit. XYZ company gives profit to mutual fund. Mutual fund, Axis Midcap Mutual Fund will give profit to me. But the biggest challenge is again, Pavan, how can I choose a mutual fund? Amma, can you believe how many types of mutual funds are there? Equity based mutual funds are there, debt based mutual funds are there, hybrid mutual funds are there, tax saving mutual funds are there, and even in equity also, large cap is there, mid cap is there, small cap is there, multi cap is there. Oh my god. And then sector based mutual funds will be there, pharma mutual funds will be there, FMCG mutual funds will be there, gold mutual funds will be there, ETF will be there, ELSS, equity linked saving schemes, ULIPs will be there. If you are a layman, you will be screwed with this terminology. But don't worry, in my next video, I'll clearly explain what is large cap, small cap, mid cap. I'll clearly explain what is equity based mutual fund and debt based mutual fund, what is the risk and return, all these things I'll explain. Today, let us see what our agenda is. So this clearly tells you that in 1960, do you remember UTI? 1964 UTI started. UTI, Unit Trust of India, was the only mutual fund agency in India in 1964. Today, more than 45. In 2014 itself, more than 45 organizations are there. Today, if it touches 100 also, there is no exaggeration. There are so many mutual fund agencies. Previously, when they started in 1980s, AUM, assets under management, was 6,700 crores. How much it is? 6,700 crores. Today, it is something around 20 lakh crores. Or it could be higher also. That means mutual funds are growing left and right. Understanding the potentiality of the mutual funds, understanding the increasing popularity of the mutual funds, SEBI in 1996 came with a regulatory framework for this mutual funds. There cannot be unregistered mutual funds in India. There is no mutual fund which is not in the control of SEBI. There is no mutual fund which is not in the control of government. So mutual fund company, just like that you cannot start, just like that you cannot collect money, just like that you cannot run away, you cannot vanish, you cannot disappear. No, it is impossible. So this statistic shows that from 1964 we traveled 50-55 years, and this 50-55 years mutual funds have grown leaps and bounds and they are touching the sky. 10 rupees mutual fund, today 3,000, 4,000 net asset value mutual funds are there. 10 rupees, you invested 10 rupees few years back, it could be 3,000, 4,000 today. I'm not exaggerating, possible. UTI, you just check what are the prices of UTI. Some of UTI mutual fund NAV stands for net asset value. Some of them are in thousands. Where is 10 rupees? Where is thousands? Huge, capital building. Then we need to understand these 4 things. Okay, what are the advantages of mutual fund? First one is professional management. I have observed myself when I invest money in stock market, I am emotional. I have knowledge, but I am emotional. Sometimes we'll have personal bias. Sometimes we'll have expectations. These emotion, expectation, bias is not driven by knowledge. Sometimes we forget keeping strict stop losses. But these fund managers, they know exit points, they know entry points. They know entry points, they know exit points. They know it very clearly. So it is a professional run management. They are 1,000 times better professionals than you and I. Even I am all India ranker in CA, all India ranker in CWA. I have got stock market certificates and all. I have done many courses over a period of last 15 years. I have got a lot of knowledge in stock markets. But trust me, my knowledge in stock markets will not even be 10% of a mutual fund manager's knowledge. Even if I'm using 10%, I'm overweighing myself. It might not even be 5%, 4%. That much of knowledge there. So they are professionally, run entities. These are. Second thing is, the biggest advantage of mutual fund is diversification. Diversification. Now imagine there are two companies. One is using crude oil as its input. One is selling crude oil. Just a simple example. Crude oil prices are increasing. Companies like BPCL, IOC, they will be happy. Crude oil prices are increasing. One sector is happy. Okay. On the other hand, you are buying crude oil to run your machines. If crude oil prices are increasing, you will cry. You will cry. A smart person is one who understands both the sides of the story and he buys the shares of both the companies. He buys the shares of both the companies. That means either this guy will make money for me or this guy will make money for me. So even if stock market is falling also, all the 100 sectors like automobile sector, banking sector, finance sector, software, okay, then FMCG, every sector will not fall now. Even if one sector falls also, for example, software is falling, that doesn't mean all the 200 companies in software umbrella will fall. No. So what these people do is they diversify. That means don't keep all your eggs in a single basket. If the basket falls, all the eggs are broken, you will not have lunch, my dear friend. Don't keep all your eggs in a single basket. So you need to keep some funds in this company, in this sector, some funds in this company, in this sector. So many financial, planning experts, they say out of your 100 rupees, you buy 20 rupees insurance, 20 rupees in bank fixed deposits, 10 rupees in government bonds, 40 rupees in equity. In that straight equity is so and so, mutual fund is so and so. This is nothing but making a portfolio. So these people, they diversify funds. That means even if one company is falling, nothing will happen to them. Even if one industry is falling, nothing will happen to them. They will balance. Affordability. I told you, you can start with 100 rupees and the cost involved in mutual funds is also very less, 1%, 2%. This is only cost. So it is affordable even for a layman, even for a student. Even if you are a student also, 100 rupees you cannot invest. Happily you can invest. Readily. Liquidity is very high because any day you want, you can sell this mutual fund in the stock market and you can exit. There are some funds with lock-in period. There are some funds with lock-in period, but to a very big extent, there are, liquid funds. I mean, liquidity is very high. You can sell it in the stock market. Open-ended funds, close-ended funds. There are so many types of funds which I'll explain in my subsequent videos. But if you invest money in mutual funds, whenever you want, you can redeem by way of a click, just one click away. That's all. And your money will come to you in T+3. That means transaction day plus 3 days. That means within 3 working days, your bank account will have that money. That's all. Very simple, very easy. So isn't it interesting and exciting journey? Answer is yes. So if you want to learn about mutual funds, I tell you, this is probably one of the best ways I have seen in my 2 decades of experience. 2003, I started investing in mutual funds. Today we are in 2021. I have 18 years of experience in mutual funds. Trust me, my dear friends, I never lost money in mutual funds. I have lost money in currency. I have lost money in derivatives. I have lost money in commodity market. I've lost money in equities. This options, forwards, Nifty, Bank Nifty. When I play game with this kind of things, sometimes I earn money, sometimes I lose money. But trust me, 99% of the cases, I never lost money when I invest. 100 out of 100, I'm telling you, I never lost money when I have put that in a mutual fund. And I have some of the mutual funds in my personal portfolio, where I have got 74 to 75% in 1 year, 75% in 1 year. Possible. Step by step, I'll show you everything. I'll, take you throughout this journey, and I will help you in building some wealth. At the end of the day, even if you are earning 1 lakh rupees also, if you are not saving money, at the end of the day, your bank balance will be zero only. Earn 1 lakh rupees, spend 1 lakh rupees. Finally, your bank balance will be zero. This mutual funds and systematic investment plan are the best techniques where you can create massive wealth. And if you are in your 20s or 30s, my dear friends, I'm telling you, you are lucky enough, because the others do not have one advantage which you have. That means age. So you invest for 10 years, 15 years, you will be a crorepati also. I'll show you, if you invested 10 years, 15 years in some funds, how this time value of money and compounding works and how you can be a millionaire. I'll show you with the help of examples and all. Okay. And finally, I'm telling you, if you invest in mutual funds, I'll not get 1 paisa also. Forget about 1 rupee. I'll not get 1 paisa also. You cannot invest through me. If you invest in any mode, I'll not get 1 rupee also. This is purely educational. It is only for awareness. Sometimes I did mistakes. I do not want others to do the mistakes. So you can learn from my mistakes. You can learn from my experience. You can learn from my knowledge. So keep watching Cap Classes Financial Literacy series. After this, I'll be doing series of video lectures on this mutual funds and all. And in my next video, I will tell you what are the best mutual funds that you can invest in 2021. So even I have done a lot of research and development R&D in this kind of mutual funds. In next video, I'll tell you the types of mutual funds. I'll tell you the best mutual funds to invest. Keep watching Cap Classes. Thank you so much.